President-elect Donald Trump campaigned on a platform of deregulation. Will that be a good thing or a bad thing for the average investor?
Joining us now is somebody we hope who can tell us, the co-founder and CEO of IEX, Brad Katsuyama. Brad, of course, came to national prominence because he was profiled in the book Flash Boys, which claimed the stock market is rigged against the little guy. Brad, you were so vocal about that. So let's talk about the retail investor and the fact that Donald Trump has said he wants to deregulate. There are too many regulations. That may be great for the business world. Is it good for the investor?
What's interesting is that, a lot of times regulation helps the incumbents and helps the established players because at times they're very complex and sophisticated. They have the lawyers and the lobbyists that can actually find ways around the regulation. So regulation that was designed to maybe protect the interests of the everyday people at times work against them. I think, you can look at an administration that's looking to deregulate, and as long as they're replacing that with principled, high-level types of regulation rather than getting very specific, or even if they're for every regulation, I know he's talked about taking away, for every rule you implement, you take away two. As long as the ones that we're implementing are about standardization, disclosures, more transparency, these are things that will ultimately hold businesses accountable, and you don't need to rely on very specific and complex regulation to do that. So I think a deregulatory environment can actually help the little person if it's done properly and thoughtfully, and it's done really with the right amount of accountability.
Brad, let's talk about IEX. When you joined us last year, you were waiting for the SEC to give you full approval. That's been done. What's happening with your exchange, and why does it benefit? Remind viewers, why does it benefit the average investor?
Sure. So September 2nd, we launched as the newest stock exchange in America. We were backed and we're owned by long-term investors, so Capital Group and Franklin Templeton, Mass Mutual. These are the funds that ultimately own IEX. We represent their interests. During the application process, you saw teachers' funds from New York and Texas and Missouri and California back IEX and support us and say, the market needs an alternative. And I think what it means for the everyday person is just that there is now an exchange, and there's now a significant actor in the marketplace that really, first and foremost, prioritizes their interests. And that really contrasts against the existing exchanges that, and it's been pretty well documented. If you just look at their financials, it tells you the story. Their number one priority is selling high-speed data and technology. Their number one clients are high-speed traders. So it's a contrast. Again, everyone has a right to choose their business path, but for us, we think that the long-term investor and also the company have been pretty underserved in this market, and that's just ironic. That's why the stock market exists, for investors and companies.
So much smaller than the big guys like NASDAQ and NYSE. Make your case right now to anybody watching who buys and sells stock. Why should I flip over to you?
So yeah, so IEX right now is hovering around 2%. A lot of people don't know, I think NASDAQ's the largest at 14%. So it's not, the difference isn't as dramatic as some people might think. The great part about being an exchange, before we were a dark pool, and those trades are anonymous, they get grouped together. It was very hard to say, IEX has built a different market, here's what it looks like comparatively as an exchange. The greatest part about being an exchange, our data is transparent, it's publicly available. So is the data of all the other exchanges. We've seen numerous reports, even reports published by our competitors. If you go on a BATS's website, execution quality, IEX ranks #1. We rank #1 because of the things that we've implemented to protect investors, things like the speed bump, discretionary peg. These are things designed to level the playing field, not sell advantages to specific people, and that just leads to better outcomes. So, we're targeted. If you're going to go buy 100 shares of Microsoft through an online broker, go for it, right? The market can suit you. But if you're invested in a mutual fund and they're trying to buy 1 million shares of Microsoft, it's a very different situation and game for them. So we look at really partnering with the institutional managers. I think that's our biggest effect on the everyday person, is our work with the large institutional asset managers.
Well, since you're owned by some of the institutions or invested in by some of the large institutions, you say the institutions are trading there every day. What are you seeing since the election in terms of, obviously the markets are up, we're hitting these all-time highs, but what is your read-through in terms of the trading action you've seen since the election, and what does it mean for the next several months in terms of the market?
I think a lot of people have been sitting on their hands for a good part of the year, and especially up to the election, because it was really a kind of a binary outcome. I think some people were shocked to how the markets responded to Donald Trump being elected, and I think right now you're just seeing excess cash being put to work.
Is that the high-frequency flash boys, the faster guys who sometimes gyrate the markets, or is that real fundamental thought from people who were parked on the sidelines?
I think it's a little bit of both, but I do think that this rally now is you're seeing excess cash being put to work. People people at times have to be in motion. They have to be investing, and you can't miss out on a rally that's kind of been this sustained. Again, you know, Dow hitting all-time highs. It's one of these things where people need to participate in the market, especially when they're being marked against certain indexes, and you're seeing the performance of those indexes. So,
Brad, you've been identified as an entrepreneur, as a disruptor. You feel better about being a disruptor in the economy in the next several years under this new administration?
Absolutely. I think especially in finance, especially in institutional finance, for us, we think, you know, a lot of the disruption we've seen in finance has been consumer finance. People, dealing with their end customers, the person on the other end of that buying the app or choosing the robo-advisor. We're in institutional finance. Our biggest client right now is JP Morgan. So institutional finance really hasn't been disrupted, but I think that we're going to start to see a trend of more companies looking to disrupt institutional finance. I think that ends up being good for the end user, and I think for us it's an opportunity to just take this business model and keep pushing it forward.
Brad, great for the update. Thanks very much. Great to see you again.